Upstream, are you with me? Under rainbow, curtain in the city, rushing through me. Downpour, upstream, are you with me? Feel it.
Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone 1 minute past midday, making it 1 minute past UTC. A big shout out to everybody that's joining the live show with us today. As everybody that watches this on catch up, we've been getting about 5,000 to 6,000 of you live with us daily at the moment, which is just an absolute pleasure, and obviously always a blessing. You know, appreciate every single one of you that drop in for the live shows. Really do. As well, obviously, of you guys and girls that can't watch these live and watch it on catch up and send some amazing messages. Had some really good questions come in recently from people, which I kind of want to take a little bit of a look at today in terms of sentiment and that. Nick, good morning, my friend. A lovely Erica is here as well. Christoph, great to see you guys. Hammer Hash, Duncan, Blair, Daniel, good morning. Great to have you all with us, as well as everybody else. Apologies if I don't see your comments throughout the show. They either come in too quickly or sometimes we don't get all of them that come in from Twitter to our stream central here. So hope everybody's okay. One of the things I wanted to do today was really kind of zoom out from the charts a little bit, add some context to what's going on, remove the noise, and get focused back on the price action right now. It's not that. So a few questions I had recently, people saying about, okay, well, how do you strip away the noise? You're always talking about being focused on the charts, but not ignoring the fundamentals nor the news events. How do you balance that out? Well, quite simply, it's very difficult to predict how the market will price in news. Okay, so coming from a traditional market background, you're looking for those key volatility drivers. You know, I'm talking especially on an intraday basis. All right, it's why so many intraday traders align their trading sessions with the open of the New York session, the pre-market, when you often get the news releases as well. You know, you get that kind of forceful swing to one side of the market. You look for recoveries based aligned with your bias, and you're looking for those, you know, those traders to be trapped on the wrong side of the market. Crypto Dick good market is tiring. You know, it's another thing that a lot of people have kind of said, right, is that people are just getting tired of this. They're getting beaten up. Now, I know this is different. In my opinion, every cycle is different. All right. You know, this is my fourth major cycle now. And I just think that, you know, a lot of what people say previously, I don't think is true. You'll hear people kind of say, look, just ignore everything. Everything's always the same. There's always this, there's always that. But the truth is there's major catalysts that affect these markets. For example, the Bitcoin ETF, right? And crypto ETFs in general, you know, that even being accepted these days would have been considered laughable in previous cycles. Okay, of course that's going to change the dynamics of markets. If you want major institutional players, investors, hedge funds, central banks, etc., to be involved in this space, which a lot of people do, then you have to expect it to change its dynamic. Blair M, altcoin season. I mean, we haven't really had that, have we? And that's what's been so different about this cycle. I mean, there are gauges and triggers that we can use to find out when capital flow is going more towards altcoins than it is obviously towards Bitcoin. You want to be looking at things like Bitcoin dominance. You want to have an eye on your total charts as well. So it's very kind of interesting point. Yargo, good morning, mate. DC Alpha, a couple of hours ago, BlackRock buys 2,520 Bitcoin worth $245.54 million. I think that these are the kind of areas that institutions are going to want to accumulate. I think it makes a lot of sense, right? I mean, I said this, I was very vocal about it, came in for a lot of criticism for it as well, saying that I just don't see institutional investment stepping in, you know, above or much above 100K. They're just going to want things lower, right? If this is the mass consolidation that we see before a really big pop, then the chances are people want to buy this stuff cheaper, right? They want it on the balance sheet cheaper, and they want to be able to cause by excessive buying pressure when they get to those levels. They want to catch. Look, you got to remember how the markets work, right? And in crypto, sometimes people can be a bit naive to this or maybe a little bit blinkered to it. But it's a game of consolidation, expansion, and manipulation and most of all liquidity. All right, if you've got a huge amount of capital that you want to deploy into a relatively illiquid market, then if you do that at the wrong place, right? So let's say we're in this consolidation here and price is kind of moving up. Now, if you're a major buyer here, right, then in terms of where you're looking at the order book, you're looking at a lot of liquidity above these highs, a lot of liquidity above these lows. So let's mark them in. Why does liquidity exist here? Well, quite simply, it's in the form of stops, right? So we're going to pop that down there, but we're going to do this green, which is counterintuitive, and we're going to put this up here, and we're going to do that in red. Which is again counterintuitive, right? Because you'd be thinking, you know, well, shouldn't it be the other way around? And actually, no, because if you're a buyer, a major buyer, right? Now, let's imagine that you buy here, right, with a relatively thin order book. The problem that you've got is that when you're buying in, you know, if you're buying a lot of something, large volume, then what's going to happen is you get large market moves, okay? Now, what happens here is, you know, you want to get your order filled here, or even lower in an ideal world. But what happens is the buying pressure that's coming in, or the amount that you're buying, is spiking the market, meaning that your average fill gets higher, which means that your risk to reward gets worse, right? So someone thinks that they're buying in here with, say, the stops below here, just for example, right? And then their first point of target is this high. Well, if they're buying in here, yeah, that's a 1.32 risk to reward, right? So what happens? That slippage takes their average buy price to here. Well, all of a sudden, that's 0.54. Why would it do that? Because they're buying. You need buyers and sellers on both sides of the market. It's a simple supply and demand equation. However, if you can get people down here, you can even afford to have a wider stop here, right? And then what you're saying is, okay, rather than this move, if we can get the market down here, then we can get everything filled really that we want before the market really rips and leaves everybody behind. How does that work? Well, quite simply, we see this quite a lot, okay? These are your classic swing failure patterns. And why are they so prominent in the market? Well, quite simply, what happens is price is drawn down to a level where there's stop losses down here. When they get triggered, they literally puke, right? They literally throw these orders into the market, right? So what happened here was price was going up, people were buying. This came down and took out those stop losses, which then made them enter the market at the market price, okay? So that's just thrown this huge pile of liquidity here that larger players, institutional investors, for example, banks, hedge funds, etc., can then get their orders filled at the price they want, because there's so many willing sellers here. They don't have a choice that they're selling. Their stop losses are triggered. Also, you'll get bots, you'll get algorithms that will trigger in terms of breakout trading. They gobble up all of that liquidity. So they're basically taking the other side of that bet. And therefore, they have a higher chance of getting everything filled at a lower price, meaning they have a better risk to reward. And ultimately, when they buy that aggressively, the market really starts to rip, and it often gives people very, very little chance to then get involved in it, okay? So when we look at this here, quite simply, we're kind of just within this range, all right? Now, this for me actually is the range high up here. And I like that as range low, but I really kind of like that as range low there as well, all right? We had price close above this key level that was offering resistance, retested it, we found support all the way through here. And as for that, we set this high and then price broke down. Now, there's also an argument that the high of the week of December 9th as well is a very, very good high. If we draw this out now onto the daily, apologies, Christoph, it's I will try and make sure that I'm, speaking at a level that everybody can understand. If not, if I'm speaking particularly quickly, it might be that this happened recently, that the YouTube speed was set to 1.25 rather than 1. But hopefully that's clear enough for you to understand, bud. So as we look at this here, we've got a clear point of resistance. We've now got a clear point of support. Up here, we can see the same deviation. Price gets underneath deviation. All right, so price being held underneath this level, either that or obviously you're looking at this as the range high. However we're looking at this, we're looking at key liquidity pools. If we just make an allowance for the wicks, we have this area here. And then if we look to the highs up here, something like this. And price is just ranging around in this area, all right? You could then put a midline on this range. You know, obviously you could do it with the Fibonacci if we were doing it by hand, which I think is a little bit cleaner. It's not going to be perfect, but I tell you, look, resistance, deviation, price gets above, moves to the highs, actually sets the highs. Price closes below, this area offers resistance. Deviation, price closes underneath, price once again sells off. What you're looking for is where price gains, fails, or manages to gain acceptance above or below a certain level, okay? So with where we are here, we see we closed underneath here and we had a very quick move down to this level. Now, this showed a lot of buying strength here, in my opinion. Look at the length of the wicks driving into these areas here, pushing price up. So as I look at this now, I'm not massively interested in taking a long position here because we're right underneath the midline. We're under an area that has proven all the way through here, close above, support, close below, very messy move around this area. It's not really giving me the indication that I need. So I'm just going to remove the midline for a moment, and I want to kind of zoom in on the price action here. Now, remembering, obviously, we're still on a daily scale here as well. Just playing games. Hello, mate. Apologies, I missed you there. And Craigie Parker, how are we doing? Right, take a sip of tea and let's crack on. So what am I looking for here? Well, I could get involved around here, but do I really know where price is heading? You know, we never truly know, but there's always indications if we focus mainly on our old highs and lows. Yeah. If we trade these levels when price engages with them, price closes above them, we see a strong big body close above, small, relatively small upside wick, then we look to this area to be retested and then for expansion higher. Should we close below this area, then we're looking bearish, and we're again looking for areas here. We either look for a retest of this area, or we would look to gaps or inversion gaps, right? So this gap before this price closed through it, this candle closed through here, was a bullish gap. You would look to that to support price and move it higher. When it fails to do so, it becomes an inversion gap, and we look to trade these areas as resistance, okay? And then we know where price, you know, is most likely to head. It's most likely to head for key lows, range low, and then we're looking at how price reacts at our gaps, all right? So here, for example, we have another bullish gap. It was bullish until price closed through it here. So when price engages this gap, we step back, we analyze, and we make a plan. We make a plan for if price holds here for expansion higher, because this could very easily just be setting a higher low, or if price closes through it, we look to this area to hold as resistance, and we can see what happened here. We got these trades to the lows. Now, nothing in trading works 100%, and anybody tells you that it does is unfortunately misleading you. So with that information, let's look at what happened at other highs and lows, because obviously, you know, these things aren't perfect. Look at what happened when we got to this high, right? We had this beautiful liquidity sweep of these lows. What did this tell us? Where we wicked below and we recovered, price wasn't able to gain acceptance below there. Buyers were stepping in, meaning that at the moment there's a discrepancy in price between where we've sold off up here and where buyers are stepping in here. So the next point is we're asking ourselves the question of where's price drawing to? If this is bullish, where's price drawing to, even if it's bullish on the short term? We had this bearish gap. I'll do this in red, right? Price sees an initial rejection there. We factor that in, but we always assume that price is heading for liquidity above old highs or below old lows. And the gaps here are really for the decision-making of whether there's going to be a rejection here or we get acceptance. Once we close above this, once again, we create an inversion gap, this time to the upside. We look to this area to hold as support. Now, when we get this strong close above the high here, that's when we're saying, right, price is now most likely to reach for this gap and higher, but it doesn't. But what happens when it closes back below? What does that tell you? Well, it tells you straight away that if we were looking for bullish continuation, you know, like we did with this high over here, like we did with this high here, right? What happened with this high? Exactly the same as over here. We've got a key swing higher, price closes above, treats this area as support, moves higher. Ultimately, price then comes back down below this level, but the difference between this move and this one is our gap, right? Exactly as we've been discussing. In fact, this gap continued to hold price until we closed below it over here. Yeah. So until that point, that was still a bullish gap. We found support here, support in this small order block, price still pushing higher. So if we just focused on what's going on there, if it goes back the other way, like this move did here, but we would have had to wait for price to close below this bullish gap here, because price is delivering bullish. We've got targets to the upside. We've just had a breakout of this high and a retest. We're now back below this level. So we take stock. What happened? Was price able to push below it? It wasn't. The wick came back within the gap, telling us that price is now more likely to attack the highs than the lows. This move above told us the same, that price was more likely to attack the highs than it was the lows. However, price closing back beneath this, then told us, okay, where do we need to look to? Liquidity targets lower. And if we're super patient here, even if we waited out for the close below this gap, this trade down to this low, was the trade that we would have wanted to take. Then we step up and we say, okay, how's price reacting at this low? Oh, okay, price closes back within. We then see some bullish momentum start to take place. Price then sweeps this low again, absolutely fine, because you see the long wick recovery, and then you know that price is more likely to move to the upside. How we then qualify that even further is by utilizing our gaps, okay? So while we see these rejections here, no problem. We're in a bearish gap at this point. We expect price naturally to reject here until we close above it, inverting this gap. And then we're fairly certain at this point, price is coming for this high via this smaller gap here. All right. So focusing on our key levels, why is that so important? Well, because people will be getting absolutely destroyed in this range, trading it around the middle. Yeah. Because again, you can still use exactly the same principles here. Yeah, so price takes a low, closes back above. Okay, where's our next liquidity target? Well, there's no doubt that it's this high. And then if it closed above this, then we look to these highs. Ultimately, price rejected here. So then where do we look for? Well, we then look for the next low or gap for price. Now, although we had a very, very small close below this here, the recovery of this low, I actually think is quite encouraging. All right. Now, is it encouraging enough for me to want to take trades from here? Well, I know this is a key level of support here. We've seen all of the wicks down here, all of the absorption, the buyers stepping in, but I really had expected this low to be taken out. Now, price doesn't have to do that. Price certainly doesn't have to do what I want it to do, nor does it have to follow every plan that you put forward. But if you're focusing on taking trades at the extremities of the range and you understand where the key liquidity is resting, you stand a much, much better chance of entering successful trades, and also trades that have a good risk to reward. So let's just say, for example, until we close above this box here and price is setting new all-time highs, this area is what we target for shorts, especially when it lines up with any of these failure swings, right? Or that's actually a swing failure there, but this one here. All right. So we've still got these untapped highs, no problem. So if we get up there, we know what to do. In the same vein that down here, once the range set, we use this area as our key support resistance flip. And then obviously we've set this up here after setting these touch points within the same area. So from this point onwards, we're pretty certain that this is acting as a range. Well, then you're getting some pretty decent trade setups, whether you're intraday or otherwise, from these areas, okay? Versus trying to kind of jump on board here, maybe where it's a bit late and you're pushing up. Depends what your trading time frame is, but on any chart that you see, you really want to kind of zoom in and see and be able to have a read on where the key liquidity is resting. And that doesn't matter what time frame you're doing it on. Your time frame should be more specific to what type of trader you are. Are you trading intraday? Are you trading position, swing, etc.? Right? But let's just do a couple of examples here. All right. This low, what happened? Initial price closes above. Okay, well, we want to see a move higher then. We don't get it. Price closes below. We look for the retest of that area and price sells off. Okay. Then if we're looking at other examples, we've obviously got this low here. All right, so prices come above here, come back down again. This is the one that looks a little bit messy here with the bodies, but ultimately we're recovering this. One of the things that's of interest as well to me here, I'm always looking at the order blocks, right? So the key areas, up close candles for bearish order blocks. So when we close below them, that gives us that confirmation that this is an area of high interest when we return there, especially if we've swept any form of liquidity beforehand, which we didn't with this. Right, but this one here, for example, that swept liquidity from these highs. See these three up close candles here. I favor using the body. That's just me personally. Price closed below here. We look for price to draw back into this area. And this is where we look for our short setups. All right. Not until price would close back above the down close candles, the bearish candles here, would we look for this to be bullish in the same vein that we did here. We have a decent bodied down close candle. Price closes above here, retested this area where we're looking to go long. All right. So that's another thing that you can do when you're looking at that and you're looking at the flow of price. Now, it's subjective sometimes, order blocks. If I've got consecutive candles or a large candle like this, for example, and a smaller candle caught within its range, I will favor the close above this high, above this body high, sorry, a little bit more than I will this one, for example. All right. Now, again, depends on the time frame you're trading. It's up to you and your own systems, but down close candle, price has taken liquidity from this low, but with this move, price closes above here. So ultimately, we're now looking for price to push higher on a lower time frame. This is where we can move down to a lower time frame. In this particular instance, we're looking at the 15-minute. And then you're looking for your 15-minute targets here. We're just looking for what's, relatively clear and obvious. Where's it most likely that price is going to move to? What do? We study the old highs that we've got here as well. Just as we were discussing, if we look at these equal highs, okay, this high and this high here, this one's slightly off of it, so they're relatively equal, which is what we're looking for. Flat highs, sloped highs and lows as well, obviously, as key liquidity targets. And then we've got this really long upside wick here. So when price drove into this area before, it found a lot of selling pressure. So we have to assume that that's going to be the same. So when we close above this here, this is the expansion candle that we would now look to trade on an intraday basis into these highs. Okay. Again, quite simple. We start closing back below here and violating this gap. If we set that gap, if this candle closes, then we can expect to move lower. And we have untapped lows here, here, and here. Okay. So in terms of Bitcoin today, I'm not particularly looking as low as that. I do favor the hourly here. And what I really like about the hourly is very similar. We had the equal high draw here. We set our order block here. After price took liquidity from that low. So now, just based on the logic that we're discussing, we're looking at a higher time frame order block here, so we can get rid of that for the moment. For me, if I'm trading intraday, I'm focusing on a daily to really kind of gain and dial in where I think price is reaching for or where it's delivering from. Then I'm using an hourly to frame the trade and a 5-minute, sometimes as low as a 1 minute, to plan out the execution of that trade. So for me here at the moment, price is moving up through these. We've had the expansion. We've set the bullish order block here. We've also just shifted structure. Yeah, so that's not just equal highs. That's also our market structure shift. Meaning that while we're down here and we're delivering low, higher high, lower low, lower high, higher low, lower high, higher low, higher high. Yeah, it's a shame because that set a lower low there. Otherwise, it would have been a market structure break coming off of a higher low. Now we're saying, okay, well, this is the first kind of, or the most recent shift in momentum that we've seen in terms of prices delivery. So now it's just a game of probabilities. We're saying to ourselves, there's a likelihood that it reaches here first, then here. Then obviously we've got a higher time frame order block resting up here. but also we have a really key high over here. So all we're doing is, in these conditions, we're looking to trade these plays level to level, rather than necessarily, looking to take those kind of leverage swing positions, which I think is what been hurting a lot of people. All right. So we are on Wednesday. I just wanted to kind of do that run through for you. I hope it has been useful. I think you're looking, when you see these kind of larger moves, focus on the extremes. All right. Even like we would with this low over here. Wait for price to give you those indications, how it's respecting those levels. Ultimately, it's pretty easy to see here that buyers were willing to step in. Yeah. Again, everything's a lot easier with hindsight, right? But we've marked out our key liquidity areas, focusing on those wicks, focusing on where price has been struggling to close into. And then within here, we see that we set that first sign, as we just discussed over here. We saw that first sign of reversal here. When we set the first bullish order block, down close candle, price then expanded higher. What do we then look for? Well, we look at where can price react from in here. And this is where we have our bullish gap. All right. And you'll see this obviously from our plan on Monday. This is exactly the move we discussed on Monday, waiting for price to draw down after setting this order block into this buy area, holding this here, and then looking to expand higher. Also, for extra confirmation, we discussed the fact that we'd inverted this. Ultimately, this did not hold. Yeah, we got the inversion on this candle here. The bullish pin bar candle, this one, you can see as it closed above. So we were looking for price to draw down, hold the inversion, react at this gap, or the order block to move higher. You'll notice we set this just a smidge above. And we just got that perfect delivery right off of that touch. Price obviously still holding this. That's why it's so important to wait for the close. A lot of people looking at this as a lower high and for price to drive lower. When you have those people offside, again, it all comes back to the liquidity games, right? The liquidity we can take. And then ultimately we get to push price higher. So, with it being our alt request Wednesday, does anybody have any that they want me to take a look at while we're here? I mean, I think obviously Ethereum is probably quite key on people's watch list as well. NBA Young believes. Sorry, mate, I didn't see you sneak in there as well. Roma as well. Actually, talking here of ETH. And you can see, again, very, very similar kind of setup that we were looking for on here. Setting these order blocks, confirming that bullish state of price, looking for those key areas to go long. Why can't ETH create same exact platform like Pump Fund on ETH? No fees, no honeypots. I don't know, mate. Unfortunately, I'm not one of these people that's in it for the tech. I am a pretty old school trader, a price action trader. I do know a lot about crypto, but I do have a wonderful team that know a lot more. But I think it's a very, very good question. I think, if you're involved with this in the nest, it would be a great question to come in and pitch in the chats for sure. I know there's a few of the team there that I'm sure would love to get their teeth into that, but unfortunately not my area of expertise, mate, but still a very good question. Here we go. Okie doke. So GUAC. It just makes me really fancy guacamole now. So GUAC, we can certainly take a look at Palm as well, B Alpha. AVAX, yes, Erica, one of our favorite intraday plays, that XRP. Yeah, exactly. A lot of people expecting a lot from that. NOS from Yago, Shadow, XLM. All right, perfect. And we'll take a look. We'll start here with Ethereum. Let me we can just get rid of a load of this quickly. Start with a nice clean chart. Beautiful. Okay, so similar kind of thing. Let's zoom right out to the weekly. And what we're asking ourselves here is, what has price finally done? And I was thinking my good friend Razoon, who's one of our trading team over at the Bird Nest as well, him and I have been waiting for an unbelievable amount of time for this low to get taken out on ETH. I remember sitting here, we're looking at this and we're like, this is going to be the move here. This is the move that finally takes out this low, maybe this one here as well, comes back into this support resistance area here. You can see if you just, even, I know it goes back further than this, but even if you kind of look at this area here, right, you can just see resistance, 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 pop above, and then this thing holds. And once again, if we draw this area back out over here, we can see, you know, how prominent that was as it kind of came over here as well. So we did get that sweep on ETH. Why is that important? Well, because it's important to understand where price is coming from, all right? Obviously, if you pull this back further as well, by the way, you make in all of these lows over here. But looking at this in terms of where we are right now, this is a long downside wick. Now, I'm not normally a very big fan. I'm just trying to see if we've got these. Yeah, this one's a pretty good example here. Yeah, the kind of abnormally long downside wick here. Yes, we did have more of an upside wick on this one as well. But, you know, this got people sort of pretty bullish here. And ultimately, this wick then just got filled in down here. And this became one of our classic, something I learned from Trader Dante, who still to this day for me, still one of the best out there. You know, this is that last low, you know, or last swing low before price breaks down here. He would also consider this the last actual low pre-break. And look what happens when you tag that level there, literally to the cent. You get that massive sell-off. But in terms of last swing low, he closed below it here. What we're saying is, look, if there's key liquidity there that led to buyers stepping in, then this should be a wick below and price should recover. When we close below it, we confirm that as the last swing low before the break. This is an area that we look, you know, to test there for a sell-off. So that's the reason I'm a little bit cautious at the moment about this wick. Not obviously that one candle, but just historically in market, these particularly long wicks. This is another one here, for example, beautiful pin bar with a short nose. But what happens? You get a little bit of bullishness, price engages this bearish gap, and then sells off. Why we were so surprised to not see it come into this area. Ultimately, buying pressure was too strong. And sometimes if things are too obvious in the markets, you can find yourself getting front run. And that's what happened here. And it certainly left me behind as well. I didn't get back into ETH until around these kind of levels here, about late 7s, early 800s, right? But yes, Jack, yes, as our Polish friends would say, it is what it is. Now we've had a sweep of this level. We've taken out liquidity from 1, 2, 3, 4, 5 untapped swing lows. When you see these areas, this trend line liquidity, that's money. Price is often gunning for these kind of areas, right? In the same way that if we look at it on the opposite factor, that we had 1, 2, 3, 4, 5 untapped swing lows here. Yeah, when price got its recovery here, look how quickly it came to gobble up that liquidity. Yeah. So always worth keeping an eye on those kind of things. Anyway, weekly, we've had a bullish reaction down here. That is good. We've also closed above this down close candle here, which we hadn't done previously. So this should be acting as some kind of order block. If we start seeing price close deep below this, then we start to understand, okay, maybe price is getting weak here. If not, while we hold this, I think this is looking pretty good. All right. We've now completely rebalanced this bullish gap, but we haven't closed beneath it. For this to become an inversion gap, price needs to close below it, okay? So that still remains a bullish gap. It's been filled because the wick has gone all the way through it, yeah? So there's no inefficiency there anymore, but a close below it would then have me believing we're coming back down for this low here. So at the moment, we're being held at bullish support. We've taken local liquidity here. We've taken key liquidity from the lows. We've seen that big wick above. So I'm going to remove this from here now, and we're going to move to a daily chart. Okay, so daily. What are we looking at after that? Beautiful recovery that we saw on Monday. Tuesday, we've set a bearish engulfing candle, all right? Small-bodied white candle there, bearish engulfing here. But we continue to kind of hold this level. Now, if we're looking at this in terms of any kind of recovery, the first thing that I want to see now, and I'm glad we've set this candle, because we have to retain a bearish bias at the moment. We're in bearish market structure, market's purging down, but it doesn't mean that I just want to jump into short trades, right? This is not confirmed yet, but should price close above this, a large body close with a relatively small upside wick, then this is where I'm going to start looking to build long positions higher. Yes, I am very aware that we have a bearish gap here, as well as a bearish gap above it. But for me, this is the first real sign of recovery, and an area that I'd really be looking for price to move into initially would be this low. The low of the order block candle, 1, 2, 3 consecutive up close candles, swept liquidity from this high probability order block. Price broke down, didn't retest this. Seems like a really kind of key area for me to see how price reacts here. I think if we see some strong rejections here, we've got a bearish gap, a rejection at an order block, I think then we can start to look lower. Until then, we have to really kind of, you know, retain a bearish bias. It's just quite as simple as that. We're looking at this now on the 4 hour. We can see again, very, very similar to what we saw on Bitcoin. We're just going to get rid of this line. We know we're kind of holding this gap, holding that order block at the moment. So this was the very first sign of recovery. Again, it's a little bit kind of pinch of salt because it's a very small bodied down close candle within a much larger range here. However, what gives us a little bit more probability on this is the fact that after this candle's close, we inverted this gap, meaning that we're expecting this area to now hold as support. The other thing that we stepped into here was this bullish gap. So we can see now how there's this level of support holding underneath. So the key thing for me now is looking at this and saying, right, what am I really interested in? Where's my liquidity resting? That's what I'm asking. We've got this swing low. All right, obviously there's this order block candle here as well. If we think that that's got relevance, then we need to look at that. We've got this gap here. I'm not going to mark that on there. It's been rebalanced to there. So this is the low I'm interested in. That's the key liquidity target. Key liquidity targets to the upside are resting here. And also here. These are the short-term draws on price. Now, one thing that's encouraging here on the 4 hour is we've set this bullish order block. All right, so our H4 order block, what's happened? Price closed above, pulled back to here. Yeah, so now while we're above here on a 4-day scale, we can say, okay, well, this is lining up quite well for intraday long setups here because we've had the change in state of delivery. We've set the order block here. We've come off the back of sweeping liquidity to the lows. So the likelihood for me now is that price is seeking liquidity above this high. And if we get above this one, then from here. So I would then look to a 15-minute in terms of these style of intervals. I would look normally to line this up with our New York trading session as well, which starts in just under an hour at 1:30 UTC. We will be trading that live with members over at the Bird Nest. So if you fancy coming along and joining us, you can find details down in the description. So a couple of things I would want to see to trigger this is I'm interested in what price action is doing now. Duncan, yeah, sure, mate, we'll squeeze Rose in at the end, no problem. Right, is we've had this expansion off the lows. Price has swept liquidity, set a bullish order block, price has expanded. So let's just follow through. I'm not going to go into this granularity with all of them, but I think it's only fair to give you guys the insights into how I would take these setups as well. Sweep from the low, we've now set this bullish order block, closed above it, right? So this is the first point of interest for me, or POI. Right, is, well, in fact, let me not be so lazy with that as well. So we can see it's our M15 order block. So price kind of coming down into here and reacting here gives me a little indication that I can then look to the lower time frames, look for price to have some kind of sweep. Yeah, something like this, a nice strong recovery. And then this is the kind of area that I can look to be involved. Why? Because I've got clearly defined risk. I know where I'm wrong. And then I've got these intraday targets above, obviously followed by the fact we've got our main targets here, which we've ascertained on the higher time frames. Okay, so that is literally what I'd be looking to do. Lower time frames, I'd look for price to hold this level here. I'd want to see price recover this as well, right? I don't want to start seeing price close like down here. We start getting in and around the 50% of this order block, then, you know, that's an area I want to see price hold. So you want to see that sweep, you want to see inducement, and you want to just see how price is reacting at those key levels, all right? And that gives us our best opportunity of success, obviously looking at that more on an intraday basis. So we're going to look through the other ones now. We've got GUAC, Palm, AVAX, XRP, NOS, Shadow, XLM, and Rose, and Squad Busters Grinder. Awesome. Can we look? Some interesting action also on BTC. Yeah, we'll see if we can find some time for that one at the end, mate. We've got about 20 minutes, so we can normally fly through these pretty fast. So I've added that to our list. Okay, so let's start then, as we said, with GUAC. What have we got this one on then? So let's take a look on Okay, that is pretty interesting. Maybe not that one. Although we have got our blue line. I think we did look at this before, actually. Hang on, maybe it was because that was it. Looking at it on a weekly, right? I just remember looking at this. I think somebody asked for this one before, and it's just so mechanical, this, right? Because you've obviously got, very, very roughly, but key areas of support that drove price higher, these massive absorption wicks showing key sell-offs here. I mean, very illiquid asset, you would think, judging by the price action. And then this is what's suppressing price down here as well. It's a very, very tricky one, right? But you're basically, a buyer at these levels, probably mitigating and taking some profit at these levels, and then waiting for price to close back above this level here. And ultimately, you've got a lot of upside targets here. I would be looking at this one a lot more from kind of a fundamental perspective as well. There's obviously a big upside opportunity. But with anything that looks like this, I'm saying to myself, okay, well, if I'm going to have a bag of this, it's going to be a bag that I'm either willing to do 2, 5, 10, hopefully more X on it, or I just expect to, to lose it all. That's without the fundamental background to this, right? Yaga, yeah, could be probably one of those things that's probably got a lot more detail on Deck Screener. Yeah, you're right. But still, though, I think, it's proven to be a reasonably good buy here. The average move up from these lows, I would say, probably to there is like 700%. So if you're just buying these lows, it's probably quite a good game to just buy these lows, sell after a few 100%. What I would say is here, Miguel, hello, mate, is we appear to all, well, no, maybe not. I was thinking we may be creating a midline here, but we're not really, because we kind of got the flat highs here, flat highs here, flat highs here, and this as well. But yeah, I would just, 30x GUAC income. I think if you buy that here, right? I mean, you'd be taking a bit of a risk with a stop below there. Maybe there's a little bit of a stop run, so you give yourself a little bit of a target. I'd probably favour these highs as take profit areas. But yeah, in terms of percentage play, it's an absolute beast, right? But you're around about 5x on the average bounce, 4 to 5x from here, I would say. I'd just probably be taking profits a little bit more aggressively around 3. But nothing wrong with that. Yeah, we'll try and make some time for Trump at the end, mate. Why not? Need to get my game face on. Right, so GUAC, let's take a look at Palm. All right, let's take a look at Palm here, and let's take a look at, why not take a look at it on Gate. So what we got here, again, I think really, really simply, if we're looking at these wicks, and we're just trying to get as many of them in as we can, some bodies as well, I would say probably this is about fair. And I'll tell you as for why. I'd be looking at that as a kind of buy zone here. Mitigation below it. You've got these to be cleared out, which is a chance you get a little stop run down to here, and then price kind of recovers that one. Jojo, hello, mate. But yeah, again, buying in and around here, I think there's probably a reasonable SR here around this kind of level. Something like that, right? You're kind of looking to play this as a bit of a range here. Buy area, I would be waiting for some lows to be swept out personally. I know this is on a weekly. No worries, Jojo. Never late. Yeah, I mean, looks bearish at the moment, right? We can see the key rejection. I think price closes and establishes itself above here. I think this thing could rip, in truth. I think it's got a lot to chase down above there. At the moment, it's kind of driving into these lows here, but this has proven to be a very good buy zone, right? Here, even a good wick bounce there, here, this area here. Is this good again down here? What I would say is, if you look at these previous ones, there's some kind of liquidity sweep and recovery, all right, before price goes up. So for me, I'd be looking for something like this. Yeah. Playing this level to level, playing it between here and here, waiting for it to establish above here, and then looking for it to kind of take out those highs above over there. I don't think that's a bad play there, actually, on Palm. I wouldn't even move to the lower charts for that. Now, AVAX, one of my absolute favorites. Let's see if we've got a clean chart with us over at Binance. We don't. Hang on. I know the Bybit chart will have a hell of a lot on it, but we do love our Bybit crew, and actually be a little bit easier to hopefully get all of this stuff. Apologies if you can hear some noise today, guys. We do have the cleaners in. I've asked them to work downstairs first, so hopefully will leave us in a little bit of peace up here at the office. just pop those on there for a minute. Right, and then we're going to hide these away. But you can see the kind of principles here, right? Just looking at these key areas of support and resistance. But right, here we are. So weekly here on AVAX, what are we doing? Well, actually, AVAX at a pretty decent level here. And I'll tell you as for why. I know it gets a little bit messy through here, but if we're looking again to embody as many of these wicks as we can, if we look to the highs of this wick here and we say to ourselves, okay, this is kind of an interesting area here for me. Yeah, you could even kind of draw it back a little bit to this area. Not the cleanest when you get to this point, but you can still clearly see support, close below, resistance through here, close above, support again, close below, resistance again, resistance, 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 right? Price comes up into here, then we get the big expansion. We don't get the retest until we do here. Bounce, 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 all right? So once again, it's always very difficult to do this. If I'm looking at this with my investor hat on, right, then I'm saying to myself, okay, well, I think AVAX is at a good level to add some here. Be happy to add some to the portfolio there. I'm not saying I'm opening swing positions, high time frame swing positions here. There's every chance we come back into kind of like maybe clear out this low, this inefficiency that's down here as well. I think we also have, pretty interesting level if we anchor to this wick down here. Not the cleanest in the world, but again, you'd kind of do that as more of a box. And you're saying to yourself, well, support, resistance, price pops through. Maybe we retest, within this lower range here. But that's where your kind of dollar cost averaging comes in. Yeah. You're kind of buying a little bit of this level here. You're targeting that level there. And you're saying to yourself, okay, if you're really kind of in with this, you're looking to maybe kind of feather in some more bids down there. Meaning that if price runs from here, you've got skin in the game. And if it moves lower, you bring your average buy price down and therefore you increase your risk to return if and when the market improves and goes up. Ultimately, price is just simply at support here at the moment, and we have swept a low, right? So on the weekly scale, that's where we are on AVAX. So where are we on a daily? Well, on a daily, I think we're going to see this across the board on a lot of these coins. For me, I want to see price doing something above here. I first want to see a close above this, confirming the daily order block, and then we need to see how price gets on with its battle here, exactly as the same as we saw on ETH. We're then coming into a clear daily bearish order block here. So the play will be kind of between this region. Any rejections in and around this gap and a move back below this area, then I think, price is ultimately going to be heading down a little bit further. So that would be the plays there on AVAX. Unfortunately, it is still bearish. Retests of these kind of bearish order blocks and gaps at the moment are certainly going to favor shorts. But this is still a nice recovery wick. So let's see how we move on with that one. XRP, let's have a look. Weekly looks quite nice here on XRP, actually. I'll tell you for why we've reacted at a really big bullish gap down here. Swept out this gap low. Also taking liquidity below this low here. And now price looks like it's kind of making a little bit of a move on recovering this weekly order block here as well, right? So as we look at that across here, yes, we've closed beneath it, but nowhere near the 50% yet. So I will kind of move on to that in a second. If we look at this from the high to the low of this area, yes, it's a large area, but even if we just allowed for the bodies, price is holding this 50% here. Yeah, so that for me, I'm not that concerned about on a weekly scale. Happy for price to kind of drive into these areas. It's taken liquidity now. We've seen a lot of buying pressure come back up into here. So really, once again, we're basing this a little bit more on our daily chart, right? So hold the weekly order block. We want to then set this as a daily order block. Remember, it's not set until we get that close above it. In which case, it would then tell me that all this liquidity has been run out, and now this liquidity here becomes the main attraction. The other thing that interests me here with AVAX is that, with XRP, is that we actually tested into this bearish gap. We haven't seen that on the others. Testing into this and pushing price lower, closing below this up close candle would lead us to believe that price on a daily scale is heading lower, right? I'm going to remove that for a second, as well as this from the weekly time frame, just to keep the chart nice and clear. We know we're reacting at a weekly gap. We know we're reacting at a weekly order block as well. But we do have this, right? You know, we can't allow our want for bullish price action to cloud the fact that we are below. Yeah, this up close candle, we close below it, bearish engulfing candle, reacting from a bearish gap. We've now set a bearish order block. So actually, this level here is looking pretty ripe for shorting. Again, more on a kind of intraday basis, I think, because if we move down now to say a 4 hour, then what you can say is, okay, if we get any reaction in here, let me remove that for a minute, because obviously that needs to be confirmed. So that's not live. Let's just tell the story of price. What makes us think that we could short this? Well, we've now got a 4 hour gap here. What would give us even more confirmation about moving to the lows? Well, quite simply, if we set this 4 hour order block. Yeah. So look, price has come in. We've set the lower high, lower low, lower high, lower low. This could easily be using this as a rejection point to set the lower high before price moves back down lower. Okay. For confirmation on that, we can wait for price to close below these two up close candles here, close below here, and then we know intraday our first target is here, and ultimately we're then just moving down to these targets lower down. Right, NOS. With our friends over at Mexi, let's have a look at this on the weekly first of all. Don't think I've charted this one before. Okay, same principles apply, kind of holding out this low. We haven't kind of purged down to these lower lows here, which that for me is really the key liquidity resting under there. But we have seen a decent reaction here from this sweep. Price has climbed back above. We're now seeing kind of, you know, bullish delivery here. Price drove into this. Again, we can see on a weekly scale that we have an untested order block here. Price could be looking to kind of draw back towards that level and then take the rejection before moving lower. There's no other gaps up here, right, until we get the close of this one. So we'll be waiting out until the end of the week anyway. So on a weekly scale, actually favoring price moving back to this area before it makes a decision, really. If we start getting strong closes above this, then I think we can probably look up towards these highs. But I do think this would be a prime area for price to see rejections. Hey, GUAC, how you doing, brother? So what else are we seeing here? Well, we haven't seen this, you know, the stage of this recovery reflected here on the daily at the moment. We've got a daily gap here that's rejecting price, daily gap here that's just been inverted. Price action isn't overly clear. These small order blocks in here, right? This latter one being untested. So maybe price is drawing there. I'm actually going to look to the 4 hour here to see if we can get any more clarity to build a picture while there's, you know, uncertainty around price. What are we looking for? Okay, what can we ascertain from this? That's the high that's capping the market at the moment. This at the moment is acting like a classic swing failure, swing point, price come up, failure to get back above. We've now had this bearish engulfing candle. But for more confirmation here, I would still want to see price set this order block on a 4 hour scale. Again, hasn't been set yet. 2 consecutive up close candles. We do have this one that's just kind of nibbled above this though, right? So this is definitely valid for me. So we're going to draw this one in as well. You know, it is partially within the realm of this, but actually extended above it. So, you know, for me, I treat that as independent in its own right. So now, you know, I'm able to ascertain a plan for the day, because I can sit in here, or longer even, and say to myself, all right, now I'm just waiting to see how price reacts here. Or if we start closing below here, I can take a marginally favorable bearish bias into the day because we've swept out a high. We've now set a bearish order block. We need to remember we are holding bullish structure here. All right. So this is where we can get a little bit more granular and say, look to the 15-minute here. Again, you would take this as more as a kind of future trade rather than a spot for the contract that we're on. But then we look for those similar setups in here. You want to see price run highs and then get breakdown confirmations if we're looking to short into these lows. Or if we do think that this thing's going to have a bullish resurgence, then we really want to see this down close candle closed above and then bullish structure on the lower time frames to move us higher to these levels above. So that was NOS, SHDW. Let's have a look, SHDWSD. Okay. So here we are on Shadow. We've got the Coinbase contract open here, just seeing where the lowest lows are. Basically that, isn't it? So that's the kind of floor as such, based on the price action we've got in front of us. Just going to do that in dark green. Hey, Ludwig, good to see you, brother. But we swept out this low as well below. So I'm interested in that too. So I'm going to draw that in there because I'm going to do that thinner so it stands off, because I don't believe that that's been swept yet. It hasn't. So for me, price is reacting at this low, which has offered support through here, wicked below it. We got that recovery, price moving up. So I think we want to see something similar. Price wicking below, closing back above here on a weekly scale, moving higher. Yakuza Kana, hello, mate. It is good to see you. He is a little bit late, mate. Only a few minutes left, but thankfully it's recording. You know you're always welcome to get in touch if you've got any questions, mate. Weekly order block up here. So again, would like to see a wick down below that and then a move higher to get some more confirmation. Now, let's take a look and see what the daily is showing us when price has kind of engaged with this level before. You see, we've seen that kind of minute little bounce here, and then price has swept below the key level, taking that liquidity, trapping people before moving on. So I think that would be something that would be good to see here. So while we have this sweep here, if this is to hold out, and this is indeed the sweep that can lead to that move higher, then again, we can look for confirmation, look for your down close candles, look for price to close above that. Use this as a base to start attacking this liquidity here, here, and here. I don't think I would want to be shorting this down here, not when you've got a lot of unknowns below this. I think I would be treating any liquidity grab below that and recovery as a chance to feather in to some some intraday plays that could potentially develop into swings higher. But on a higher time frame, looking at this, I would want to see this recovered, and then we can start to look higher. Because look, consecutive down close candles, failure to close above. Consecutive down close candles, failure to close above. This candle is within the range of this larger order block, so we need to consider that as well. However, I would still see that as an early stage bullish resurgence because we've swept liquidity and we've reacted at a key level of support. So that's just so XLM. What do we got here? Whatever that squiggle meant obviously worked out all right. Or maybe it didn't. Let's have a look before we get rid of it. Hey, there we go. Move below the level, key liquidity. We wanted to see a slightly deeper move into here, but ultimately we got that recovery. Price came up, but didn't really attack the highs that we were looking for over here. But yeah, always the same principles, right? Looking for those key levels. When you recover them, ultimately, if it's not showing weakness, then the chances are that it's probably looking to move a little bit higher. Yes, mate, I am going to fit you in at the end there, Squad Busters Grinder. Don't you worry, mate. We've just got rows to do after this one. Then we're on to Link BTC for sure. Have you talked about Sui? I will try desperately for you, Yakuza Kana, if I can fit it in the next 5 minutes. Let's give it a go, shall we? Right, okay, so looking at this on the higher time frame, I'm not going to draw these bits in, but this is looking very, very similar actually here to XRP. Nice reaction off a big weekly bullish gap, swept out a low, and at the moment leading a nice recovery wick. We failed to close below this down close candle, which is positive, and this one here, this much smaller one, again within the range of the larger one, so we take it with a pinch of salt. However, because it swept a high and closed below, the retest of this played out beautifully for trades down into these lows. We would look for the same in the resurgence. We would want to see price close above here, ideally on a weekly scale, to be really confident the price was looking to move higher. I think the daily will give us a lot more information. This is a very bullish wick. Again, these long downside wicks can be a little bit tricky sometimes, purely from the basis that we can often see them get refilled. But this one is a good example. I know again had a long downside wick, but this upside wick here, price coming back down, bearish, price came back to fill some of this in before then ultimately continuing. So again, clear plan here is I want to see price above this, confirm this as an order block, and then we look for price driving into these gaps here. We did get a retest of this order block here because we closed below it and retested it here. So we know we're kind of driving up into an area that already formed some kind of resistance. So we can move above that and look at that on an intraday play. I think until then, we need to obviously be aware that we have now closed below this. So we would look at this here as the bearish order block because that one's been confirmed. We won't draw that on until it's been confirmed. This ultimately is a point of rejection that we would look to trade back down to these lows until proven otherwise. Okay, so that's where we are on XLM. So Rose. Yes, I mean, Rose has cleared out some quite nice lows here. I'm not sure if it's taken out this. No, not yet. So I would definitely be looking at that as a key level. You know, ultimately what price has done is it's taken out this failure swing here and has had a little bit of a decent reaction here, remembering that this is obviously still continuing to play out. Again, we don't really have much to go on here, and it is exactly the same as the others, this one, guys, right? I would still be favoring price coming into that. That's the bearish order block here on a daily scale. That's where we're looking for rejection and price to take out these lows. Very interested to see a sweep of this local low as well as this historical low. If we get a recovery here, I think we could see a nice bounce. But again, unless we close back above this up close candle here, the very small white body, then I'm not expecting, you know, any bullish moves higher. We're still favoring moves down to that key liquidity, even more so here on Rose, because we've set that failure swing and we left that level, you know, untested. They end up being a really big magnet for price. So I'm really watching 0.03334 here for some kind of recovery, unless we close above the order block here. Close above it, setting the order block, which is around about 0.04838. So now Link BTC. What have we got going on in Groovetown here? So we've tapped into these down close candles here, which has led, you know, in part to some of this bullish resurgence that we're seeing. Just looking to see if we've got any real kind of clear and obvious pivot points here. Nothing that really jumps out. Probably this here. It's a bit of a large area though, in truth, but I would say something like this. Not lots of data, but look, we've got a real key resistance here, absorption here from the wicks, rejection again here, large rejection here, price closes above retest, large move higher. This area caused a big move up. Again, we can see when we drove into this area here, we took out this swing low, price recovered beautifully, and then we went higher. This is looking weak here. So in terms of what we're looking at with our levels, I would want to see price. Well, let's draw the order blocks in first, right? Down close candle here. We'd need to see price close above that to confirm the bullish order block. Ultimately, what we have done here is just closed below this one, a smidge of a body. So this rejection here was definitely for selling. So we need to wait for price to either invalidate this by moving above here, or if not, we're still favoring price moving down to make a move. I would say starting with these lows here. All right, yes, we have tagged into this order block here, but there's also all these other down close candles. Yeah, I think as it stands at the moment, while price holds below here, again, looking for a deeper drive into this unless we recover this and get back above there. We've now filled these inefficiencies from this move higher. You know, look, higher high, higher low, lower high, now looking to set the lower low on the microstructure. So a little bit kind of off on that one. So I think if we now move to the daily here, we can see again the daily aligns with what we're looking at on our weekly, which is that we've set the order block here. So we've got the daily order block, the weekly order block. I think any kind of move into this area here will favor shorts into these lows. But again, a move above and an early stage recovery would see us close above this white candle here, this bullish candle, and then we could be looking for a move up to retest this area and ultimately the highs that rest above it. So yeah, it is looking interesting. I would just want to see this as a deviation, price kind of climbing back above this level here. We can see a kind of support and resistance level here as well. If we focus on these kind of wicks, I think you're looking at this kind of absorption here, rejection. If you draw this back, almost certainly, you know, support, lose this area, rejection all the way through here, strong close above, big move from here. Again, start closing below this area here. We look to this for retests and to sell that off lower as well. So very quickly going to look at Trump. As we can see, everybody buying into the frenzy up here before the real big sell-off. I'm not going to take this onto weekly. There's just not the data. Again, any resurgence in Trump coin, we want to see it back above this level. you know, as it stands, there's not really much else to say on that one. If again, I would be very, very cautious trading this asset. Very, very, very. This is your high risk of your high risk. Yeah, this doesn't really tell us any different at the moment. Again, this is a very, very small body here within the range of a larger block, so I would focus more on that. You know, if we're looking for a little bit of bullish opium, we have this inversion gap here. So this was a gap that was suppressing price here as it sold off. We didn't tag these lows, which is something, although we have been holding above this low here. Yeah, so I would focus here on price closing above this one first of all, and then we know that we've got our weekly level up here. So close above here, worry less about the weekly in the short term because it's going to take longer to play out. And I do think, especially if we take out this high, then this high should be the next key liquidity target before we've got a lot of liquidity to run on here. But please do be super, super crazy careful trading that. Right, okay, and for Yakuza Kana, our friend here, let's just take a quick look at Siri as well. Weekly, exactly the same as XRP and everything we've been looking at before. Hasn't tagged the weekly order block, but reacting here at the gap. It's taken out this low, which has seen a nice initial recovery here. The daily, I think, will give us a little bit more to go on. Yeah, daily's had a really nice liquidity sweep of all of these failure swings, right? Even all the way down to this one. And then it's completely rebalanced, or almost rebalanced this one here, just about to pop. So again, from here, I think we want to be very aware that we're being held by this bearish order block at the moment. Price came up, 2 up close candles, price closed below here. Big rejection here, another rejection here, but it is kind of sticking to this level, right? So that is of interest, right? I think, again, to be safe, you'd want to see price kind of come and close above this, but, you know, sorry, above the down close candles here. We do have this smaller one within the range, which is here. So we could look at that for an early stage recovery, but ultimately we're at a key point of rejection here. And we need to remember that we have also rejected from this bearish gap. Okay, so I think the safest play would be to wait for price to establish itself above here and push up. At the moment, it's a little bit confused, right? Maybe draw this down onto here very quickly. Yeah, very, very similar, right? So look, price holding this bullish gap at the moment. So I think if we were looking for more downside confirmation, if this isn't going to hold and move higher, we have this bullish gap here. If we close below this, making this an inversion, my expectation would be that this sweep and reaction from the high time frame gap that pushed us below the daily order block would then have us seeking liquidity below these lows. All right, guys, I really do apologize. I see a couple of requests just coming. We're not going to have time, I'm afraid, for ADA and OP. You can find descriptions down. You can find descriptions. You can definitely find descriptions in the description. You can also find information on how you can come and join us over at the Bird Nest in about 5-6 minutes time after I've made a fresh cup of tea. We are going to jump onto the charts with members and do some live trading. We're going to look at setups, dive deeper into the charts, see if we can find any intraday plays here on crypto or across on the indexes. I will be back with you live on Monday. It's just Joe and Durga. Please do pop onto the show if you're around. I'll be happy to take a look at those for you then, or come and grab yourself free access for the membership or one of the deals to come in board, and come and ask us in-house and we'll chart them all up for you and look at the plays that the trading team are reviewing at the moment. Wishing you all a fantastic week ahead. Please do trade safe. Remember as well that we do have red folder news coming up. So today, Wednesday the 5th, we've got ISM services PMI. We're also in about 6 minutes from now going to have the ADP non-farm employment change coming up as well. So please do keep a look in that. Sikinia, hello, my friend. Wonderful to hear from you. And you're very welcome, Jojo, Yakuza Kana, everybody else today. Almost 5,000 people live with us again today, which is obviously just a blessing. Please don't hesitate to come and ask me some questions. You can catch me over at the Bird Nest, where I lead our wonderful trading team and run the desk over there for the Mercurial Crypto Burb. But please do also come and give me a follow on Twitter, BC_Richfield. If you want to reach out, you can find my updates as well as any decanting that I've done from today. You can just give me a follow over there and you can look at the charts and even pop me a message if you want to as well. We can take a look at things, take the chart requests ready for the shows. All right. Demetria, happy Wednesday to you too. Duncan, very much the same to you, my friend. And Siki, yeah, always good to see some insights. Let's see if they play out, right? Everybody have a magnificent week ahead. Please do trade safe, be good to one another. And I look forward to seeing you legends around the nest.